What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and into the rest of the week. Before we get started, don't forget to check out the description below. There's some links to Discords, some socials, other ways you can support the channel. Really appreciate it if you guys take a minute to take a look. Also smash a like, subscribe, share with all your friends. Helps to get the information that I'm bringing you guys out to everybody else. So without further ado, let's jump into the charts. Today I'm just using a couple basic things from the Smart Money Concepts indicator by Lux Algo. Also have an automatic trend line indicator on, just so we can see if there's any major trends developing, as well as we have the premium discount equilibrium setting on the Smart Money indicator. I have the fair value gap set to chart or set to hourly instead of chart, because I primarily day trade and scalp, and so what I care about when I'm looking at the 1 minute chart is I care about the 15-minute and the 1 hour fair value gaps. We also have our previous day, previous week, previous month high and low setting on our Smart Money indicator as well, and also I have these liquidity indicators. And when they're gray, that means they've been mitigated or that level has been taken, but it does still show mitigated liquidity levels on there, which helps with some of the structure where you might see break a structure or change a character based on those liquidity levels being taken. The dark black lines here are untaken liquidity levels, and apparently it looks like it's just showing mostly the swing levels on this current chart setting on the daily chart. So we're going to look at where price ended today, where price came from last week. So last Friday, half trading day, we had a small range and we had a small green candle after a larger sell-off on Wednesday. We set a range here on Friday, and you can see on today's candle we ran a test. We failed to deliver on the high of Friday, and then we also came down and ran a test on Friday's low, which we did take. I believe we hit it, by a little bit, and then rallied up from there. We did close above the high, the closing price of Friday, which is important, but ultimately we're just running a test on this breakdown candle on the daily chart. And until we crack that opening price here at 242, we are mostly neutral leaning at this point. We're just kind of trading inside of, again, that Friday range. Now our range on Monday, also small range, but basically the same as Friday's. So tomorrow we'll be watching to see if price breaks above the range of Friday and takes that liquidity, or if price again trades down below and takes the sell side liquidity first. If we drop down into the 4-hour chart, let's go back. So on the daily chart, we have this kind of megaphone pattern that is formed. You could also say this low to this low is starting to form a wedge pattern that we could see play out as well. But we'll be monitoring that. Mostly what I want to notice is the resistance trend line that is developed here. And so as we move into the other time frames, let's go ahead and mark this one off. And we could see that resistance tomorrow. If we were to, have a nice run up, we'd be looking at resistance at 248.84 being the high, and looking for that resistance line to contain price. And if we were to head down, our targets are liquidity levels, and then the wick here, and then we have a fair value gap in here. So we have some different things that we're targeting down below. But as far as containment goes, we'd probably be looking at 226, 227 to contain price tomorrow. Again, if we fell from there, we could see anywhere as low as 215. Don't anticipate that's going to happen, but wouldn't anticipate lower than like 226, 227 if we were to start kind of aggressively selling off tomorrow. So let's drop down into the 4-hour chart. Again, the 4-hour chart, we have a different pattern that is developed. Different major pattern on the 4-hour chart. We have a bullish megaphone pattern here, where we've set a low. We have our high here. We have a second high. So now we have 2 points here. right? And now we're just consolidating, trading sideways. So you can see that first 4-hour candle of today, we traded down. We took that liquidity in the wick from Friday and that low, and then we came up and we failed to deliver on, well, that was in the early trading session. We tried to go up. We failed to deliver on Friday's high, came back, took Friday's low, and then traded up from there. And then a little bit of selling on the second half of the session there, where we got a black candle. So although we're neutral, the most recent activity has started selling. And what I have been looking for, and I'll go ahead and draw it out. Not saying this is going to happen, but I did say I wanted to see us potentially come up, and take Friday's high. We did not. We failed to take it, but I did say I wanted to see us come up there. Then I wanted to see us come down and potentially test this trend line here on this megaphone pattern and set another low. Now, the longer it takes us to get there, right? If we hit it in Tuesday's session, we could see a low of 222. If it took us longer, Wednesday session, we're looking at 224. If it took us into Thursday's session, could be all the way up at 225. So it just depends on how long. If it goes into Friday's session, we're looking at 226, 227. And then again, we could trade sideways all the way into next week, and it would be hitting that trend line in the 230s. So something I'm going to be watching for. You can go ahead and mark it off on your chart. At this point, what I really care about is the support level. I don't care as much about the resistance, because the resistance is, you can see outside of this down, this bearish resistance that we already have overhead. And so we would have to break these liquidity levels here to the upside. Then we would have to break this resistance in order to get all the way to this megaphone resistance level. So what I care about on this time frame is our support that has started to be created here, because I would be interested in seeing price come down, test support, and then rally up, test resistance, potentially break it, and then take some of this internal buy-side liquidity in these wicks, then potentially all the way up to 268, 269. But I do want to see a little bit of more downside correction before a move like that happens. I don't think we're going to rock it up, but we do have Tesla Cybertruck news coming out, and so we'll see if that ends up being a catalyst to run the market up, or if we get a sell the news kind of event where the news gets released and then we start seeing selling from there. So if we do start to rally up first, heading into the Cybertruck news, we might expect that we would see a sell the news kind of event. But if we start selling down first, which is what I kind of anticipate is going to happen, Tuesday, maybe into Wednesday, then the Cybertruck news comes out. That could potentially be a bullish catalyst that drives the market back up. So I'll be watching for those different things to play out over the next few days. But again, we have a clear look at Friday's high here, Friday's low. This is not updated for Monday's low. But they're basically the same, because like I said, we traded inside that range. We have previous week low from last week. We have previous week high. So again, we're range bound inside here. And so if you want to mark that off on your chart, you can. You could just do some rectangles. And we could say we have a range that has developed here. And we'll do that one in light gray. And then we have a larger range that we're also still inside right here, and we'll do that in our dark gray. So we can see there is two ranges that we're kind of locked into, which is our sideways movement. We're not going to count this shadow here, and we're going to just say we're locked inside of both these ranges. So what does that mean for price? What that means for price is, again, if we trade up and we break outside of this range, right, we could expect a move to try to test that range, the bigger range, and see if we get stuck on this liquidity level here of 246.82 or the downward resistance. Okay, and if we were to trade down and we were to break outside of this, we're pretty close to breaking outside of that. Okay, and then we would potentially see a test on this 4-hour support level. So two different scenarios that could play out, but we'll be watching both of these ranges as we break out of the first one. Do we attack the second range, and where do we find our support or resistance at that point? So I'm going to delete these for now, but if you want to have those on your charts, they can be helpful for you to watch those range breakouts. Now I have those listed here as the previous week highs and lows, the previous day high and low, so I can see my range right there on all time frames. Dropping into the 1-hour chart. Okay, the 1-hour chart, we have a bit of a wedge that is formed, and so we are down on support, or down near support. We tested it. We've hit it a couple times here. Now we're coming back down. So we're getting into this tight wedge of this triangle where we are going to come and quickly approach an apex. So again, maybe we come up here and we test it and we come down here. And if we come down here, does it hold again, or do we break down low? And now we start to see some 15-minute fair value gaps that are here. Like I said, I have my indicator setting on the 15-minute fair value gap. So if we were to attack these levels, take them out, I'd be looking for us to trade down into the 15-minute fair value gap, which would look to be a break of support, and then I would anticipate a move up from there. I don't think that we're going to break that trend line and hold it and hold below it. If we do, it'll, I think, be a quick strike down into those fair value gaps, equilibrium on the 1 hour time frame, and then a bounce from there. But again, if we were to start trading up, we're back into the premium, which is where we already came from. So I think it would be a quick draw on liquidity on these equal highs, and then there, and then potentially could we break out? Yeah, we again have our resistance levels, we have our liquidity level, and we have above previous month high up here. So we could see a breakout like that. Again, the catalyst could be the Cybertruck news. So, but again, on the 1 hour chart, we have this developing triangle pattern, which we're approaching the apex quickly. So I do anticipate, I don't think we're going to get all the way to Thursday where it's going to be really tight. Tesla does have a tendency to move. So I do think that this 1 hour triangle is going to get broken probably sometime tomorrow would be my guess. Don't forget that on Tuesdays, we're often looking for manipulation. We did see our accumulation here on Monday. It actually started on Friday into Monday. So we've seen accumulation happening. And is that accumulation going to be a move to the upside or downside will be determined. So tomorrow what we're looking for is a manipulation move. So do we get that quick strike down here in the 220s, steal some liquidity, and then run up from there? Or do we see a manipulation move that runs up, strikes these equal highs, takes some buy-side liquidity, and then see the distribution to the downside following that manipulation? So again, other things that we're going to be watching is the manipulation and then distribution following. Let's drop down into the 15-minute chart. On the 15-minute chart, you can see where those fair value gaps came from. We got fair value gaps in there. And then as far as our automatic trend, we did break out of this triangle pattern here. So that basically will get invalidated. As we saw it tested, came back down, we broke out. But that breakout wasn't continued as we started to sell off a little bit from there. So there wouldn't have been much of a move if you played that breakout. Would have been maybe like $2-3 move on the stock. So would have still been good if you played that triangle breakout. You would have still got a nice scalp there. But it wasn't, because we were running into the end of the session. Happened after lunchtime or during lunchtime. And then we saw a little bit of correction after that. So it wasn't a nice big move, wasn't explosive, but still was tradable either way if you had that trend line on your chart. Some other things we're looking at on the 15-minute chart is we're looking at this fair value gap and this fair value gap, right? Kind of an inverted fair value gap. I think on the 1 hour chart, it actually is an inverted fair value gap. And an inverted fair value gap is where you have one fair value gap. Let's drop back down to the 1 hour so you guys can see that nice and good. But you had a fair value gap here that also ended up being a fair value gap here. And now we've traded back up into that fair value gap, which is partly what has led me to believe that we're going to trade down. Because we saw bigger displacement than we saw to the downside than we did to the upside. Ran a test on these lows. We've come back up into the inverted fair value gap. And if we draw that out, you can see what I mean. So here we have two fair value gaps in the same area. And we've seen price trade back up to it. Now we've seen price trade back up to the liquidity that's right here in these wicks and then start selling down. So again, I do anticipate that we're going to see further downside as we gather liquidity that's in this fair value gap. But time will tell again. And then on the 1 hour chart, if we do start seeing that breakdown, we will break down from that trend line. So if you're not already in a short position and we do break this trend line, you can play that short down to your liquidity levels, potentially all the way down to your support level. Back to the 15-minute chart. Again, just a clearer view of the different levels that we have going on. So if we were to, see a move back up to the upside, we're looking to target 238.36. From there, we're targeting 238.74. From there, we're targeting fair value gap close at 241. Then our next liquidity levels are at 243.61 and at 244. So if we start moving up, those are going to be your different target levels. So if you're looking for a long entry, you're looking for the setup. Again, a good setup could be entering on this trend line. So if you have that trend line on your chart, connecting these two lows right there, and those are from last Wednesday and today. And if you're looking to go long, a low risk entry would be waiting for price to come back down, test this support line. You can enter there. If it breaks down, easy way to take your loss and mitigate risk by taking that loss for significantly less if it starts to break down. But that could be a good entry point on that support level. And again, if we get to that support, we'd be looking for upside to take the liquidity targets. Now, if we do, again, early strike on these liquidities tomorrow, this liquidity pool in these different wicks, which again, we've already traded back up. This is an order block right here. And then we've traded back up into the order block and held. We did not set a higher high. So that also tells me that there was a good short entry here in this order block, and it traded down from there. Doesn't mean we can't come up and trade back up into this order block tomorrow early before we sell off. But that does tell me there was a good short entry here. And again, back on the 1 hour chart, entry up here last Friday was inside a fair value gap. So if you took that fair value gap entry, you got a nice play during today. Would have been a nice swing to take on Friday in that fair value gap. But if you missed it and we traded back up into the order block up here, and this is an internal order block, so it's not listed on my indicator because I don't have that setting on right now. But that is an order block. So if we traded back up in here and you caught that was an order block, you could have got a nice short entry there, and you're potentially playing that entry from 238 down to this support level in the 233s, and then further from there, 232.11 liquidity target, and 231.39, another liquidity target at 231, and then below that, we have our ultimate goal of 226.60, which would be a previous swing low. Would also bring us down to discount because we came from premium on the 15-minute chart. And now we're looking to target discount being in the 226 area. Last, I want to show you guys the silver bullet setup from today. I missed it. Didn't quite read the chart the way I wanted to. But I want to show you guys regardless of what that entry looks like. If you guys can get really good at learning how to trade the silver bullets, there always are entries in the silver bullet time frame. So what we want to be watching for is we want to be watching for a delivery on liquidity to happen before the silver bullet time macro. So silver bullet time macro is 10 o'clock to 11 o'clock New York time. And so here we want to notice that today price trades down. Okay, before 10 o'clock, price takes a low. First, it sets a low. Okay, fails to deliver on liquidity, comes back up, delivers on liquidity. So something I've also posted recently in the Discords is a lot of times why people's stop losses get triggered because they may have chosen to play this bounce here and go long here. And then we come back around, we steal the stops that are in here. There's stop losses all through here. We deliver on the liquidity, and then we rallied from there. So with the silver bullet setup, something we're looking for is we're looking for a delivery on liquidity. So in this case, we delivered here down to this liquidity level. You can see there's a black line. It's a liquidity level. Okay, we come down, we deliver, and then we set a fair value gap right here. So that's a classic setup or initial thing you want to look for with the silver bullet. Is that fair value gap. Okay, it doesn't matter that we traded back down through it, but we're looking for a low to be taken, deliver on liquidity, and then we're looking for a fair value gap. So we're looking for a displacement candle that gives us a nice imbalance, and then we're looking for optimal trade entry. So if we measure this off, and then I switch to our optimal trade entry, Fibonacci tool, you can see we come down between the 618 and the 705, which is our optimal trade entry. We didn't quite hit it perfectly, but we come into that level. That's the level we're looking for in the silver bullet time frame. So again, liquidity delivered on, displacement candle, fair value gap, back to optimal trade entry, and then we target previous high right here. So that would have been, about a $2 run, which would have been a nice scalp. Now, you could have let it continue to go and see if you got more from it. And you could have targeted this fair value gap that's right here. Or if you know how to use your standard deviation tool, which I've talked a little bit about, we'd be looking at taking this low, this previous high here, or this previous low here. Let me turn on the standard deviation, and with that, you're looking for, anywhere from 5 to 10 standard deviations. So you can see on our chart that when we traded back up and took this high, we were at 4.5. Okay, we hit 5 standard deviations, and then on that run, we hit all the way to 7 standard deviations. So you're looking to close the trade between 5 and 10 standard deviations. And you can see 10 brings us all the way back up to the top. And if you were to have had the patience to let the trade play all the way out to 10 standard deviations, which took a while throughout the day, that would have been entering around 10 o'clock and letting it ride all the way till 12:47 or so, but we end up hitting the full 10 standard deviations. So some way that you can use that tool. If you don't know, hit me up on the socials and I'll teach you how to use the standard deviation tool. But minimum, we're looking for 5 standard deviations, which we hit above the previous high. So you would have gotten a little extra if you played that silver bullet using the standard deviation instead of just targeting entry to previous high here. So I hope that's been helpful. Again, I'll post another video tomorrow. Hopefully I can give another update on what the silver bullet looked like for tomorrow as well. Good luck with your trading, and we'll see you on the next one.